This April surprise, along with the April showers that seem to have hit some of our crop, at least particularly in some parts of the north and the northwest, I want to turn your attention towards the housing market. And the reason I am asking you this is in terms of transmission and impact. The first quarter of 2023, despite the hike in interest rates, by all reckonings, it seems to be a continuation of a boom that we have seen in the residential space, especially in the upper end of the market. There has been no impact, and 9.5% could be the number that we need to focus on for the home loan segment. There are similar examples that we can give from other sectors. What does this example of real estate tell us about the impact of tightening?
So if you look at the home loan segment, for example, we see that growth remains as robust as ever. And we should remember that home loans are based on the EBLR, that is the external benchmark. Meaning when I take a home loan, I'm told that whatever rate I am, it's a flexi rate scheme which I get into,
Yes.
It's going to be linked to the repo rate. So if the repo rate was 4%, let's assume I was getting it at 400 basis points higher than 4%, I would be getting it at, say, 8%. Today, when it's 6.5%, it automatically becomes 2.5%. Now, the curious part is that even though the rates have gone up, we have not really seen home loan growth slow down. But the reason is that whenever anybody goes in for a home loan, you're very well aware of the fact that in a period of, say, 15, 20 years, when you will be servicing this particular debt, there will be phases when interest rates go up, there will be phases when it comes down. And you may not be hit directly because you go on the basis of AMIs, which may not exactly be for 10 years or 15 years. It could become, say, an additional 6 months or a year, depending upon how the interest rates move. So I think that's one of the reasons as to why the mortgage segment has been very buoyant. And that's something which is being focused on by all banks. And that's what we're seeing, that there's a focus on retail lending, home loans. And that itself is putting pressure in terms of overall demand in the market. That's why we're seeing that the real estate sector is doing very well as of now. Not just in terms of the premium residences, which anyway do have demand most of the time, but even if you're going downwards, down the pecking order, there has been very good demand, aided also by the fact that one was getting loans at fairly competitive rates.
If you like the video, do like, comment, share and subscribe.